Welcome back, as we are now entering what we call the denial phase of the bull cycle, or the rotation phase from the bull market into the bear market. You can see here, we are now hearing from the quote-unquote experts like Tom Lee, who is the CEO of Bitmine Immersion Technologies, the Ethereum treasury company, that the Bitcoin price and crypto price crashing are due to a software bug. Well, what part of the cycle is this? This clearly is the denial phase. This is the deal, guys. We have been covering literally for months on this channel since the middle of the year that the bull run is coming to an end. Nobody wanted to admit it. Nobody wanted to believe it. Nobody wanted to agree with it. In fact, nobody really even wanted to hear about it because these videos on my channel performed the worst. But at the end of the day, the market in front of us is the market that we're trading. It's not the market that we want. And so in today's video, we're going to be exploring how the Bitcoin bull run and crypto bull run, therefore, is now over. And we talk about this every single day of the channel, every single day of the year on this channel. We have covered this extensively, and we have been so accurate and so correct on where we are in the cycle, where the cycle's moving, and we are making money, whether the market's moving higher or moving lower. And there's some people who don't like me saying that I was right about these calls in the market, but guys, I mean, I was right. And our calls on this channel have been dead accurate. And so in today's video, we're going to be exploring all of this, but before we get further into it and hear actually from Tom Lee and some of the other participants in this market, make sure you guys give this video a free thumbs up. Also, hit the subscribe button. That way you never miss a new video. We upload every single day of the year to bring you the latest happening in the financial world. We're going to be starting right here. Let's get into it right now. Now, again, this channel is about making money. And so the only thing that matters is that your portfolio is making money. It doesn't matter whether I'm right, you're right, I'm wrong, you're wrong. The point is we want to make money. And so we're going to start here with Wu Blockchain, who's reporting that the Alliance DAO co-founder has tweeted reiterating his view that the next bear market, timing unknown, well, actually it's not unknown. We are rotating into the bear market right now. And you guys can see from the top of the market to the bottom of the market in the previous 3 cycles for Bitcoin has been 1 full year. And so we have a lot of people calling the bottom already, and we'll get into that in a little bit. But we are nowhere near the bottom of the market. Anyway, he says that he expects this next bear market, it will be the worst than most people here expect, saying a large cohort of dumb money who know nothing about crypto are buying spot Bitcoin and crypto and ETFs, which never ends well. The market may end up another roughly 50% drop while these people liquidate their positions before a strong foundation can form and the super cycle can resume. Additionally, Chris Bernisk tweeted that the era of digital asset treasury selling has only just begun. Just as it went up, it will go down. And this is something that we have been covering on this channel literally since the middle of 2025, when we called the top of the market. We called the top of the market in June or July of 2025. And that was literally the top of the market for the MicroStrategy price. Effectively, it was the top of the market for the Bitcoin price too, although the Bitcoin price went a little bit higher after we called it by about 10%. But that's not anything to be like, oh, see, Cryptoviser, you were wrong. It's like, I would rather be out 10% below the top than 50 or 60 or 80 or 90% below the top. And by the way, we've already seen some of these digital asset treasury companies moving down that much. So in September, the DAO co-founder of Alliance said the next bear market, don't know when, will be worse than most people here expect. There's a large cohort of dumb money who know nothing about crypto, buying digital asset treasury companies and ETFs. This never ends well. And he said, pretty much, in the end of November. Now, Chris Bernisk said the era of digital asset treasury selling has only just begun. Just as we went up, so too will we go down. And effectively, this is accurate to the T. Guys, we have already seen multiple, okay, not 1, not 2, multiple, more than 3 digital asset treasury companies already selling their Bitcoin. They're already doing it. And the digital asset treasury bulls are like, no, Cryptoviser, we're still in a bull market. Okay, but that is by them selling their coins after multiple years of them saying, oh, we're never going to sell our Bitcoin, we're never going to sell our Ethereum, that we're going to be holding these for hundreds and hundreds of years. This is a breakdown of that narrative. So much so that now Jim Cramer is even commenting on the obliteration, effectively, of the crypto super cycle and the end of the bull market. Guys, it's not the end of the bull market forever at all. We're going much higher over the long term. But in the short term, we are due for correction. And those who say, oh no, Cryptoviser, you're wrong, or said that in the past, you were wrong 100% of the time, because we have been so accurate on this channel with our calls for the market. And we're making effectively potentially more money on the downside trend than we were in the upside trend, because everybody was waiting for more highs, and most altcoins didn't do that. So going to Jim Cramer's tweet says the consistent bullish crypto cheerleaders are due for a full court press using claims of $1 million per Bitcoin in 2030 or some magical nonsense. They need to defend themselves as they always do. Saylor, meaning Michael Saylor from MicroStrategy, is due for multiple appearances, basically saying that he's going to be on multiple podcasts or TV shows. I will chat GPT what Saylor will say today. Wow. He literally went for the jugular on Michael Saylor and the whole Bitcoin thesis. Now, listen, I understand that a lot of people think that Jim Cramer's wrong most of the time, and for the most part, he is. Okay, they even have a reverse Cramer index, but that doesn't mean that he is not aware of what the market is doing. Right? He's not in crypto. He don't give a about crypto. Okay, the stocks that he shills, most of these he's in. Right? He's buying. Crypto he doesn't care about, and so not everything that he says is invalid. And a lot of what he says is valid, whether it means anything for the market or not, I don't know. But at the end of the day, it is true. As I've said over and over, you don't have to convince anybody that we're in a bull market when we're in a bull market, because the prices just keep going up. There's people who come on my channel and they're like, no, Cryptoviser, we're not at the end of the cycle because of the M2 money supply. We're not at the end of the cycle because Rob Powell said that the business cycle is extended. It's like, you don't have to convince me that we're in a bull market when we're in a bull market. You trying to convince me that we're still in a bull market when we're literally rotating into a bear market shows and further proves that we are no longer in a bull market. Because in a bull market, you don't have to convince anybody. Everybody just knows that we're in a bull market because the prices keep going up. All of the sentiment is very positive. Everything from these companies that are involved in whatever the bull market is in believes it. We're seeing the same thing with the AI situation, right? The AI companies are like, oh no, we're not in a bubble. We're not in a bubble. We're not in a bubble, even though they're clearly in a bubble. And most investors, at least smart money investors, are like, no, this seems like a bubble. And they're like, no, we're not in a bubble. Sam Altman didn't ask for the government bailout, even though he did. He didn't ask for that. No, he did ask for that. And so that further proves that we're in a bubble in AI. But the bulls who are fully allocated into AI, they're going to say, no, I mean, we're not in a, they're taking it out of context. We're not in a bubble. We're actually going to go much higher. And it's like, no, you trying to convince me tells me that we are in a bubble and we're probably going lower. And sure enough, most of those stocks have come down since that occurred. To me, it's very clear. That's why I just don't understand. I mean, many of you guys, it's probably very clear too, because you've been watching my channel, you've been watching my videos, you've been listening to the thesis. But there's a lot of people in this market. To Jim Cramer's point, to Chris Burness's point, to the founder of the Alliance DAO's point, like the smart money has gotten out of the market already. The dumb money, they keep allocating. They keep putting more money in. And they're prolonging the bear market because they just keep buying the dip. So they're not letting the market correct because they keep buying the dip, even though the dip keeps dipping. Anyway, this user who is a Bitcoin and MicroStrategy and Metaplanet maximalist, apparently, he said, kind of looks like we're right before the optimism phase. No, be sure, but sure, complacency it is because markets look scary and spooky. So he thinks that we're in the optimism phase, okay? We went from $15,500 in Bitcoin to $126,000 in Bitcoin. And he thinks we're only down here at the beginning phase of the cycle. And then jokes and says, oh, but sure, we're just in the complacency phase. It's like, no, We're way past the complacency phase. We're way past the optimism phase. We are now in the denial phase. My investments are with great companies. They will come back. Meanwhile, Bitcoin is down about 30, 40% from its all-time record highs. But the bulls are like, no, buy the dip, buy the dip, buy the dip, buy the dip. We're still in a bull market. We're right down here in the optimism phase. No, we are not. We are not. The optimism phase was down here. This was the euphoria phase. Now we are past the complacency phase, past the anxiety phase, and in the denial phase. And we're going to hit the panic phase once we're probably around $50,000 Bitcoin, maybe even lower than that. And so again, I could be wrong. I definitely could be wrong. But at the end of the day, what is making more money right now? The upside to the market or the downside to the market? The downside to the market, because the upside keeps going lower and lower and lower. The same user on X said Bitcoin increased from 109,000 to 126,000 and it took 10 months to do so. I've never seen a euphoria blow off top leading to a bear market after 10 months of sideways consolidation and only 15% move beyond the all-time high, especially when we sat below all-time highs ranging within 10% of the highs for 3 months prior. Again, what are you talking about? This is financial gibberish. You're trying to convince me and everybody else that you're writing this to that the bull market is still here and we're in the bull market. I've never seen a euphoria blow off top. Your literal profile says that you've been in Bitcoin since 2017. So you've been through 2 cycles. 2 cycles is not, well, I've never seen this happen before in Bitcoin. Guys, this is the same thing. In the middle of the year, when I called the top of the market, go look, just type in Saifedean Mamous top on X, and you'll find a video where he's interviewing with a female journalist in Bitcoin. And he's like, yeah, we're coming to the end stages of the bull cycle. And she's like, wait, but based on the previous cycles, we should be at $200,000 right now. You don't think that we're going to hit $200,000? And he's like, we may, but probably not because we're at the end of the cycle. But she's like, but in the previous cycles, we should be at 200,000. It's like a lot of these retail traders have no idea what's going on. They're still in the previous cycle. They're like, in the previous cycle, we did this. It's like, okay, but we're not in the previous cycle. We're in this cycle. We're not trading the market that we want. We're trading the market in front of us. And the market in front of us is, yes, Saifedean Mamous was correct. We're at the end stages of the cycle. In the middle of 2025, I was correct when I called that. And I have people on my channel saying, no, Cryptoviser, this cycle is different because we have an extended cycle. It's like they said the same fucking thing last cycle. And so all of these people are down substantially in their portfolios if they didn't take any action in their portfolios. And now they're trying to convince everybody, oh no, I mean, I've never seen this happen before. It's like Bitcoin has barely been around for that long. And you're probably also going to say that we're not having diminishing returns as the Bitcoin cycles go on, which we can clearly see from the cycle 1 to cycle 2, to cycle 3 to cycle 4, diminishing returns. But people are like, no, we don't have diminishing returns, Cryptoviser. What are you talking about? That is who we're trading against. That is who we're trading against. He said, none of this is a euphoria high. In fact, it was probably the least enthusiastic all-time high in Bitcoin history. And maybe it was. Maybe we didn't have euphoria like the previous cycle or the cycle before that. But it doesn't matter. The market is not operating to make you feel euphoric in the cycle. Okay, because again, we went from 15,500 to 130 or 125 to $130,000. That's like 8 or 9x. What stocks do that on a regular basis? What stocks do that every 4 years? Almost none. Almost none. And so just because you don't think that it's an enthusiastic high cycle doesn't mean it isn't. He said it's very likely we're seeing the final stages of a historic rotation of coins moving to new hands, coinciding with abnormal megatrend with AI tech boom, taking away flows that would be interested in Bitcoin. And that's true. AI is taking away from Bitcoin. And so this idea that, Bitcoin deserves to go higher. No, it doesn't. No, it doesn't. Bitcoin doesn't do anything. I mean, even ARK Invest, Cathie Wood, lowered her 2030, which is the next cycle effectively, price target of Bitcoin from $1 million to $700,000. I mean, this is still a big number, but That's a 30% reduction. And she said it's because stable coins are doing what we thought Bitcoin would do, essentially payments, micropayments, transactions, and stuff like that. Nobody's using Bitcoin for that, even though they've told us this is what Bitcoin's going to be used for. This Bitcoin's going to be the world reserve currency. No, it's not. Stable coins are. And stable coins are being used for payments. And the banks are picking up stable coins. And that's where the money's getting moved into. And now a lot of the next big thing is AI. And so a lot of investor money is moving from Bitcoin, which is not performing the way that everybody promised it would based on the previous cycle. And it's moving into AI because AI is the next big thing. It's bigger and better than Bitcoin. And if you don't believe that, just look at the NVIDIA market cap. The NVIDIA market cap at $5 trillion all-time high is larger than the entire crypto market combined. All the coins, all the meme coins, all the altcoins, and Bitcoin market cap combined, NVIDIA is larger than that. And so that's the next big thing. It's not Bitcoin. Everybody knows about Bitcoin. Everybody knows about Michael Saylor. Everybody knows what Bitcoin is promising to do. And a lot of the things that most altcoins have promised have not come to fruition. And so at the end of the day, he said, I'm not buying it, sorry. Basically saying that the cycle's not over. Well, it is. It is over. More bearish sentiment is showing that Dave Portnoy, again, just bought crypto on the first major dip that we saw. He bought $1 million in XRP, like $500,000 in Ethereum, $500,000 in Bitcoin, something like that. And Gordon Johnson, who is a financial analyst, 61,000 followers on X, said this is actually quite bearish. When you have uneducated money, quote unquote, still buying, it's hard to form a bottom. You need everyone to exclude doom and gloom in order to feel a real floor to be established. And I would agree. These are bear signals, guys. Every dip that we have, all of this uneducated retail money, they're like, oh, we're at the bottom of the market. Everybody on X is saying we're at the bottom. But we're not at the bottom, guys. If you just look at the historical charts of Bitcoin, from the top of the market to the bottom of the market is approximately 1 year. And then we need to formulate the bottom, which could take months, right, to form the floor of the cycle. They just think, oh, well, I bought it, 50,000 and I was told we were going to go to $500,000. So this must be the dip before we get there. I mean, eventually we may get there, but it's going to take much longer than most people are anticipating. And that is the point. I'm not saying that I'm bearish forever on crypto. What I'm saying is we're here to make money in the markets. And so if we know we're at the end stages of the bull cycle, why would we keep buying into the bull market instead of betting against the bull market continuing on, right? Because at the end of the day, when I made those videos about the top of the market, I started piling in to MicroStrategy inverse ETFs, and those have performed clearly better than the ETF the daily ETFs for the long side and MicroStrategy. MicroStrategy is down 50%. Most of the Bitcoin treasury companies are down 95% since the middle of the year. But Cryptoviser, you were wrong. You were wrong. Stop saying you were right. Okay, whatever. You guys get it. You really do. Most of my viewers get it. But we have a lot of people out here that we're trading against. They have no idea. They have no idea. Meanwhile, Raoul Pal is commenting on the downtrend in the market. And again, long ass tweet. You don't have to convince anybody that you're in a bull market when you're in a bull market. But this is all about, don't worry, guys. We're going to get there. We're going to get there. We're going to get there. Anyway, Raoul Pal, who is a very smart investor, very smart individual. But again, people take what he says and they're just like, oh, he says we're gonna, this is exponential growth, so we're never gonna have a bear market. It's like Raoul Pal never said that. He never said that we're never gonna have a bear market again. That was Michael Saylor. Anyway, Raoul Pal said, utterly brutal crypto market with relentless, rapid position unwinding and rumors swirling. After 10 out of 10 of impaired market maker balance sheets leading to less liquidity and someone blowing up. It reminds me a lot of 2021 when in a 4-week period, Bitcoin fell 56%, Ethereum fell 62%, and Solana fell 68%, and then sharply reversed and exploded to new highs. That sell-off was as baffling as this one. With the macro backdrop still so positive, I don't know about that. It's hard to think that we won't see something similar here, a sharp recovery, but massive downside volatility like this is not easy for anyone, and not certainly something I expected to see at this stage. But it's also not out of the norm, and I would agree. Here's the deal, guys. We have the Federal Reserve meeting coming up in December. There's still a lot of people that believe even if the Federal Reserve cuts rates, which they have been doing, and Bitcoin is now moving down, here's the deal. Like, they may not cut rates. And even if they do cut rates, that's not money printing. And what are they going to cut? 0.5%, 0.25%? Big freaking deal. We need to see multiple percentage point decreases and money printing to see the markets reverse. But that doesn't mean that the speculation of what the Federal Reserve is going to do or is doing, because I see it on my channel all the time. I see it on social media. People are like, the Federal Reserve is ending quantitative tightening, bull market. And it's like, no, we've been in the bull market and they've been quantitative tightening. So just because they're ending quantitative tightening doesn't mean all of a sudden the market's going to all of a sudden flip. It's already priced in. So guys, pay attention to what's going on here, because now we're hearing, I mean, look at Gary Cardone. This is an excellent perspective, talking about Tom Lee's viewpoint that the drawdown in the price is due to a software bug. What part of the cycle is this? Guys, this is the most ridiculous thing that I've ever heard, and I'm quite shocked that we are hearing this from Tom Lee, because historically I do think that Tom Lee has gotten a lot of things correct. We followed him very closely on this channel and his calls on the market. But saying that Bitcoin and crypto are drop is due to a software bug, listen to what he says here. And by the way, if you're up to this point in the video, don't forget to give the video a free thumbs up, and also make sure you guys are subscribed to the channel. That way you never miss a new video. Let's listen to Tom Lee.
I think the crypto market has been limping along since October 10th, because on that date was a negative shock. I mean, today's stock market
flash
was a lot
crash.
like an echo of what happened on October 10th. But on October 10th, that liquidation was so big, Brian, it really crippled market makers. And our market makers are critical in crypto because they provide liquidity. I mean, they act almost as the central bank in crypto. And if they've got a hole in their balance sheet that they need to raise capital for, they need to reflexively reduce their balance sheet, reduce trading, and if prices fall, they've got to then do more selling. So I think that this drip that's been taking place for the last few weeks in crypto reflects this market maker crippling. And so in 2022, it took 8 weeks for that to really get flushed out. We're only 6 weeks into it. So I kind of concur. I think crypto, Bitcoin, and Ethereum are in some ways a leading indicator for equities because of that unwind and now this sort of limping and weakened liquidity.
Well, that was the point that my very, very smart team behind me, we put together for the top of the show, which was showing that Bitcoin turned down today before the market did. All right, take us back. So October 6th, I think it was October 6th or 7th, Bitcoin hit 125,000. Yeah, a couple days later, it was still around 120.
This was when we saw the top of the market, and then we saw a flash crash shortly thereafter.
Now, obviously, Bitcoin's at 86 and change. So what specifically occurred on or around October 10th that would lead us to where we are now on November 20th?
Yeah. Well, Steve actually pointed this out. There's a lot of what they call automated processes in crypto. One of them is called ADL, okay, and that's an automatic liquidation feature that would take place if someone's account or their collateral drops in price. It's essentially like a margin call. On a specific exchange, a stablecoin's price varied from other exchanges. Stablecoin should stay at $1. It dropped to 65 cents. But that only happened within the exchange quotes, within this exchange because of liquidity. That triggered an ADL, an automatic liquidation across many accounts. It wiped out as that spread across other exchanges, right? Because liquidations cascade. Almost 2 million crypto accounts got wiped out, even though minutes before they were actually profitable accounts.
So who is behind this? Like, who's the they in the market makers and they got hit? Who's the they?
Well, Brian, I am aware of names, but because I'm not someone who wants to name names, I think what you should keep in mind is that this error is actually essentially a bug, a code error, because I think in retrospect, they would have pulled pricing from across exchanges to set the price for that stablecoin rather than relying on internal quotes. But this has resulted in a lot of market makers and traders having less capital. And as you know, as crypto prices drift lower because trading volumes drop, they need to then have more capital available, which means they shrink their balance sheet further. So this is then that reflexive weakening.
Now, here's the deal, guys. I'm not saying that none of that happened because it did, right? And I'm sure that there was liquidation errors and there was depegging from the stable coin valuations and all of that. Got it. But here's the deal. It's not like you and I knew that that was exactly what was going to happen 3 or 4 or 5 months ago. But we were able to see where we were in the cycle and the fact that there is going to be over leverage. There is going to be people taking out debt. There is people who are maximum bullish and don't think that we're ever going to have a bearish sentiment in the market ever again. So even if that wasn't the situation that created the flash crash, it would have been something else. And this is the point, right? That we don't move up forever. And this idea that we are, and that it was just a software bug that created the downtrend, and now we're going to be going down because of that software bug. It removes the, and I don't know why, because I'm sure Tom Lee understands how cycles operate. And so the fact that that's the narrative and that that's what's being pushed, and people are like, oh yeah, it was just a software bug, don't worry about the cycle. It's like, no, guys, the cycle is the cycle is the cycle. We were able to see it, and we're not geniuses. We're just looking at where the market is. That brings us to this. Choose Rich Nick on X said the fact that MicroStrategy people are posting this video that I'm about to show you is nuts. If MicroStrategy misses a dividend payment, their stock will tank regardless of their solvency. It means the model is broken. And again, this video basically is of Michael Saylor on the Gary Cardone podcast or whatever, and he talks about MicroStrategy preferred issuance that are perpetual, meaning they never have to be paid back, and that's different than debt, and that dividends will not cause the company to default. But the thing is, MicroStrategy doesn't make any money. And so the only way that they can pay these dividends, currently at least, is by selling equity, selling more preferred shares, which is basically the PONZI type deal, right? And so that's where the concern is, because if they can't pay the dividends because the stock is going down and there's not enough liquidity in the market, which by the way, the stock is going down and there is less liquidity in the market. Well, how are they going to pay the dividends? Now, maybe they'll pause the dividends until there is more liquidity and we are back in a bull market. But here's the deal. If they pause the dividends, then all of this is going to drop precipitously as well. And so again, that goes back to the conversation of the model is broken. The Bitcoin treasury model is broken. And they are selling Bitcoin treasury Bitcoin, right? Well, I told you guys, when we see one company starting to sell their Bitcoin, the cycle is definitely over. Because if one company is selling their Bitcoin, more are going to sell their Bitcoin. And we know that they're doing this. I have another video coming out where we're going to talk about Nakamoto, which is down 97%. They sold some Bitcoin to invest in other Bitcoin treasury companies and outside the United States. And the CEO, David Bailey's like, yeah, but we're not selling our Bitcoin if we're reinvesting that Bitcoin money in other Bitcoin treasury companies. It's like, no, you are. You're selling your Bitcoin, and you're, instead of trying to build up your Bitcoin thesis and cash flow and stuff like that, you're focusing on these other things and these other investments in other companies when your company's down 97% and those companies are going to go in the same trajectory as we enter a bear market. This makes no sense. This is not capital preservation. And at the end of the day, there's very few people who see this right now in the end of 2025. You guys are part of an elite investor group that understands how this cycle is operating, how this is all coming down, and how it's going to continue. We may have pumps throughout this, right? Approaching the Federal Reserve December meeting, there's going to probably be a lot of anticipation like, oh, the Federal Reserve is going to cut rates. Even if they don't, they're ending quantitative easing or quantitative tightening, and then they're going to start quantitative easing. And so there's going to be bullish sentiment. That could be a pump. But these are all bull traps in my view, because like I said, we are not at the bottom of the market until a year from now. And that doesn't mean you can't trade the market, because there will be pumps, there will be a lot of dumps. But the trajectory is lower. The trajectory is down. The cycle is over. And the people who don't think that, that's who we're trading against. They are the exit liquidity for the bears in the market. Because bulls make money in the market, bears make money in the market, but greedy, pigs, they go to the slaughterhouse, right? And that's how the market works. Remember what Warren Buffett always says: be greedy when others are fearful, and be fearful when others are greedy. If you think people are fearful now, when we're at $80,000 range or $90,000 range, wait till we're at the $50,000 range. Wait till we're at the $40,000 range. Wait till MicroStrategy's down 90%. Whether that happens or not, I don't know. But if it does, that will be capitulation. That will be forced selling, forced bag holders, people completely underwater. They don't even know what to do. And that's not us, because this channel is about making money in the markets. It doesn't matter whether you're going to be right or I'm going to be right. It matters what the market is doing. The only thing that should be correct is your portfolio. And if your portfolio is not correct, then you have to correct it. You're the only one that can do that. And so again, it doesn't matter whether I'm right or wrong, although we've been right on this channel for a long time. It matters what your portfolio is doing and whether your portfolio is right. And so you can keep betting for the market to go higher, but if we're in a year downtrend, the market's going lower. And that's basically how the cycle operates. It's not my cycle, it's the Bitcoin cycle. See you guys in the next video. Let me know what you guys think down below and what you're doing in your portfolio. I've been seeing a lot of comments recently from people who've been saying that they're glad they found this channel. They're glad they bet against the market when they did. They sold when they did. You know, I was warning all through July, August, September. Last warning, sell your crypto. Last warning, sell your crypto. Last warning, bull trap, bull trap, bull trap. A lot of people said, no, we're going to 140, 150. And by the way, the goalposts keep getting moved. We went from 300,000 to 250,000 to 200,000 to 150 to 140 to 130. I'm like, we were at 126,000. If you're cheering on 130,000, why don't you just sell at 126,000? It's a $4,000 difference. Cryptoviser, we're still in a bull run. Don't say we're in a bear market. How dare you? And it's like, okay, this is a channel for winning. See you guys in the next video. Thanks for watching.